We good? Okay, cool. So, the biggest thing about this, and I know looking at some of the price action and what we're doing here, was mostly just a little bit about how I set up my own watch list and the way I look at different price action instruction and what's important to me. Kind of like when I turn the computer on in the morning and I go start going through stuff, it's kind of like the routine that I've got myself in so I can get situated for the day. It gives me stuff to think about of like what's happening, what's happened, and then kind of gives me an outlook because then I can say, well, today these are the points that I'm really interested in, and how did that change from yesterday and whatnot. So basically going to set up a couple different like easy things that make sense in my head of ways to stuff, important things that I look at. So first thing in the morning, you know, whatever your routine is, kids to school, grab your coffee, whatever it is. There's a couple things that I really need to build a watch list that to keep an eye on, and it's a lot of stuff that people don't think about, but they're overall pretty useful, right? So one of the biggest ones I always look at, you guys know, right? Dollar currency index. You can use it from TVC or the index itself. It's either or. It's around about the same thing. The big thing here is that with the dollar currency index, the general gist of things is related to the markets. So if the dollar's dumping, it's because people are entering riskier assets in the same sense that if the dollar's pumping, people are exiting to liquidity. And again, this isn't the dollar itself. The dollar currency index is a bundle of different currencies, which kind of gives us a better perspective of it because it allows us to actually see, you know, not just the dollar, but like what everything else is going on with it. So I think specifically, what are the specific currencies in the basket? You know, you have the euro, UK, the euro, the pound, the Canadian dollar, the Swedish crown, the Swiss franc, and the yen. So it basically tracks, in a sense, the US dollar against the 6 foreign currencies. And the idea is that you're getting an indication of the value of the US dollar in global markets. So generally, if the dollar currency index is going up, it's strong, powerful, especially for forex traders or anything like that, because you're basically it's a liquidity, right? You're looking at in forex, it's liquidity to liquidity. With the dollar currency index, it's what's happening in the market based off of are people entering positions or people, you know, exiting or are people entering, and that's generally the flow of travel. There's going to be times where they move together. But if I can see like from day to day, hey, the current daily open, you know, from early this morning when I turn my computer on, I see that we bearishly backtest the daily. What do we expect? A nice little pop to the upside, which is what we saw on most things, right? So that's one, the dollar, big deal. Then you want to make sure you have a look at stocks and general market stuff. With that, it comes down to a bit more of, you know, what works most for you. For me, TradFi markets are an important thing to keep an eye on. So I will look at stuff like the ES, right? I'll look at the ES. I will look at stuff like the NQ, you know, the NASDAQ and the S&P 500. You know, if the ES is continuously moving strong and good, gaining levels, again, general healthy move in TradFi. Same thing as the NQ. Very strong bullish upside move. It actually looks like it's failing or getting ready to fail a bit. But overall, that's what I look at. Okay, this is all going up. That's great. With Bitcoin, the biggest thing that I look at with Bitcoin is, you can do it Bitcoin futures in the CME. For me, the best thing in my head, you can use Bitstamp, I suppose. My favorite one, of course, is the biggest spot trader, which is still Binance, I believe. So Binance Spot, especially since I use, you know, Tether and not USD. It makes more sense in my head because I know the chart very well. But you should always be looking to chart on the things that you're trading. So if you're trading on, say, BitGet, right? If I'm taking my positions on BitGet, I want to be charting on the Bitcoin USDT perpetual mix, which is the futures contract for BitGet, right? It's an important thing to remember because, yes, some of the charts will deviate, but the more accurate you can get to what you're actually trading, it gives you a better perspective of what's happening. So, like, as an example, there's some bigger liquidity moves to the downside that aren't super translatable sometimes to spot. So a lot of times when you'll see massive liquidity movements between, say, Bitcoin in price and futures prices on different tickers, most of the time you'll see that pumps go higher on futures and dumps go lower on futures, because liquidity increases, and the fact that people are getting liquidated or stopped out of positions, that increases the price action movement. So for me, I like a little bit more standard when I'm actually starting to understand the markets. So Bitcoin USDT spot, that's a big one. Same thing as ETH, right? This is all basic stuff, but it's important to reiterate like the flow of how I look at things. Like the dollar, the TradFi markets, Bitcoin and ETH, both of these combined, these two tickers alone is about 2/3 of the entire crypto market. So if you want to know what's going on in the crypto market, look at Bitcoin and ETH. Are they healthy? Are they gaining structure? Or on the crypto market, right? So that's the way I look at things. I look at the ES and the NQ in the same sense I look at the Bitcoin and the ETH. They're the two things that show the general trend of the market for the entirety of cryptocurrency. Some other things that are important to look at: BTC.D. That's a big one that I've used a lot. And then a custom one, and I recommend people try this because you can make a lot of custom charts in TradingView, is 100 minus BTC.D, and then you hit enter. You don't look for the chart because you're making a new one. What this does, this chart here, it actually allows you to see the top 100 cryptocurrencies that are not Bitcoin. So you see ETH dominance, you see all the alts in the top 100, which to combine, what is this? It's 52% of the market. It's a very, very big deal. So overall, between this and Bitcoin dominance, they're the inverse of each other. But it's important to see that, hey, this thing's gaining, this thing's losing. You can definitely see if you're into alts, which most people are, look at 100 minus BTC.D. This is a really simple one where you can set alerts and yeah. What do you mean? Yeah. It doesn't change it dramatically. Yeah, I mean, again, it's all based off of like the percentage. For me, it doesn't make sense because it changes because you're doing it at a percentage change, right? So when you do 200 minus BTC.D, you now get stuff like 152%. So it doesn't really play out. The only one I've ever seen, because you're doing a percentage change, is 100 minus BTC.D, because it's literally subtracting the Bitcoin dominance. Does that make sense? Yeah. Yeah, so 100 BTC.D, that's the big one. Again, you're able to see the alt moves. I honestly like this more than Bitcoin dominance because I trade a lot of alts myself. So it's an important thing to keep an eye on. I do miss, and I'll be honest, I do miss a lot of the different perpetuals we had on FTX, like the different indexes they built, alt perp, DeFi perp, shit perp, all those fun things, because it shows you the different types of markets that are moving. So that's a cool thing that you can see from it. There is one you can use now, which is DeFi. Actually, let me just add it off of, so I'm adding to a list. DeFi USDT premium index, right? You can do the perp, excuse me, not premium. So the perp perpetual futures, this is an important one in my mind if you are also looking at alts to trade for crypto specifically. So DeFi USDT perp, it's as good as we have it right now. Is this thing changing? Exactly. Thank you. And that's another great point. So definitely looking at these things: 100 minus BTC.D, DeFi USDT perp on Binance, to see the health of DeFi, to see the health of alts. And as Egil said, it's a great thing to be trading for the bot trading and whatnot. And hopefully we'll have another session with that here in a little bit, because Mr. Bing is out doing his travels. He actually came by my house not that long ago, like a week ago or 2 weeks ago. So it's an important thing. So kind of like looking at this from an important time frame. This is really all you need to start, and then whatever you have and this is specific to crypto, of course, and everything else you have, you add your own charts, like whatever cryptos you like to trade. Like for me, I like Near and Matic and Sol and Phantom. I haven't traded them much now, but there's a bunch of the top 20 coins, top 30 coins that look really nice. I like things that lose levels. But overall, the best morning routine that there is that I've ever found is very simply, whenever you fire your charts up, you go right to the dollar and you look at it from the weekly perspective, right? Has anything major changed? And it's always good to have a high time frame. The monthly, it's a little bit too high for me to be actionable, but the weekly, what can I see? I can see that we've lost level. We've bearishly retested the gain of structure that started the move to the high. We've bearishly lost kind of like that whole range from 105 to 113, 114. That's a big deal when we have that test. We've come back down now to some lows. We're testing some structure to the downside. What happens if we lose this low? Well, I'm pretty interested in the price action once we start breaking below some major levels, because now with this move, the spike to the downside, what did we actually do? We've actually tested the highs from the previous structure, which means I'm expecting price to dump through and have a massive blow-off bear market rally once we start losing the lows we created back in January of this year. So, because this is all tested, right? That's all we look at from a perspective of have we tested it, have we not tested it, and we have. So, again, high time frame to low time frame on everything. So that's my major level I want to see lost. Translate that out however you will. The best thing you can do is set alerts on it. With the ES as well, where are we going? What are we doing? Making higher lows and higher highs, bullshit backtesting the yearly open, starting to squeeze into the upside. All we really need to do is gain 4150, and we have a pretty good probability of start ripping to the upside. Again, I've talked about April Q2 has been a major target, because there's a lot of structure to test up here, right? We've got these swings that are untested on a weekly level. We've got overall, the move should happen really quick because we've already filled out a lot of volume. And it just kind of gives me a perspective. What can we not lose on this chart? Yearly open, 39, 3.9K. If we lose 3.9, it's over, and we're coming back down to like 36 and potentially lower. There's a lot of stuff on specifically the ES and the NQ that's untested to the downside. So NQ as well, higher time frame. We're breaking out in some major structure. We're testing some levels. Very strong. NQ's been leading the way. We should see some little pullback around 13.2. Maybe see what happens in this structure. Gaps by rule do not need to be filled when you see them on a chart or an index or whatever equity, stock, whatever. But they have a higher probability fill than not. What do I want to see? A little test to the upside, bullish gain, and then the eventuality is that we move right back up to test some major levels. Testing the swing at 14.7, maybe even 15K. It's all possible. We're gaining highs, we're making higher lows and higher highs, and have been since the low in October, the start of January. It's all been bullish structure, and that's what we've been seeing. So, again, high time frame is always king. You're always looking at the major stuff. If you're looking on the higher time frame on Bitcoin, I would recommend that you add this chart, the BLX, the Brave New Coin Liquid Index. The reason for this is because this shows the start of Bitcoin's price action to where it is now. And that's pretty important, right? With this, I can use stuff to chart all the way back, as far back as you want to see. If you want to see price action from 8 years ago, 10 years ago, whatever. But the big thing that we have happening right now and is happening is we have, as I talked about on the stream earlier today, we have a big test of the lows from January 21, right? This is the 2021 open. We've literally missed it by, call it $100, if that, on this index. So there's a lot to be said about the importance of the levels we're testing. Because can you infer just higher time frame? Well, if we flip and gain this kind of like the 29K, 30K level back, we're essentially gaining back the range that we lost in a lot of ways. But so it's a major high time frame level. I know yearlies are not sexy to test to chart, but if you have the time to look back a couple years and to actually chart yearly opens, it's an important process. It really is, and it's very helpful. So overall, again, looking strong. There's a lot of untested stuff around 35, even though, that low's arguably tested, but 35, 38, Realistically, April Q2, still kind of looking at it because we're risk off. But the idea here being is that I want to look at all the different charts and tickers, what's happening on a high time frame, top 100 coins, what are we doing? We're basically in a range. We're at the low of the range now. We're testing some major structure. And we should, if we see a move back to the upside, we start gaining levels. I can use this to start formulating where I want to have tests. So I already put the line in here, but I've had that for a while now. If we gain, say, 53, I want to add an alert on that thing because I want it to give me an alert. Right? I want to know if dominance is massively gaining on altcoins, because what that's telling me is that the dominant shift into alts is potentially very bullish for altcoins, because altcoins have been getting punished. As we know, the previous move in Bitcoin, or what's been happening with Bitcoin, is that it's been in a very strong upside move. So one of the easiest ways you can make sure you don't miss major changes is stuff like on dominance. You find your major level. Well, here's a monthly SR, 51.9. Let's set an alert there, right? Add the alert on the horizontal ray. So if we start breaking below it, coming back down to some very high time frame swing structure, that tells me that, Bitcoin's still leading the charge. If we gain 53%, 53.1, it might be the alt seasons are back on, right? And overall, that's a big way to check, because in these moves, by the time it gains this level and goes above 53.1, the alts will start moving, and you'll have that ability to catch the moves back to the upside. So there's a lot of things to be said with that, and especially higher time frame. Going back down to the daily, right? The daily is still kind of king. 4 hours are great, and you're still looking for major structure. I'll turn this off for a second, but ideally what you're doing in here as well is you're identifying some daily structure that's really helpful in the overall. Let me just group all my charts into one so I can draw and turn it off. Boom, there we go. So what do we have here at 26.9? That's a daily bullish engulfing candle. We can call that a daily SR, so to speak. The weekly open is also that, right? So again, two very reactive levels, daily SR. Also, the weekly open coincides with some of this topside structure here. So we want to see a hold of this level. And what you very easily do is you identify levels that you can't lose, right? Things that invalidate, per se, upside trends, upside moves. And if we lose them, like say if we lose 26.9, where do we have to go? But really simply, if we lose 26.9, where do we have to go on the chart? Well, we have to come back down to test stuff at 25K, maybe even 24.2. There's a lot of structure that's left untested. So it also gives you a good point to be, when you set the alerts, you want to make sure they're set on crossing. So that's still a very valid level. And if price goes back down, you get an alert saying, oh, shoot, look for the short. And then price comes back up, but bullishly backtest the level. That's an easy long, right? And that's how you stop yourself from being, invalidated in a sense. It's like if it breaks and creates new lows, what's the invalidation of the downside? Regaining the levels, right? Bullishly backtesting levels to go to the upside. And that's what happens. So overall, that's kind of like the way I look at things from like a morning routine in a sense. The trades that I plan, right? I want to make sure that when I actually set up my trade plans, all I'm looking for is like a couple major things. We've got a couple videos that Egil's recorded for us about the trade planning, which is looking at risk reward and all that stuff. So if we fail 26.9, right, I want to be able to look at that and say, well, there's a potential short on the bearish retest of the level. I want it to at that point come back down to 25K. I've had that level in for a while as well. So, if we get the bearish retest of the level, can I do that? No, not all the way up to the weekly open. That's way too high. But what if I take it down to like that local flip? Is that good? If I do it to, say, there? Yep. Right? That's a very good risk reward on a potential short. So what I do is I'll set my alerts and say, well, if we go below this, I want to enter a short from that position. That type of thing. Or if we currently hold the daily open, you might be looking for a long. For me, I'd be more interested to say maybe we can long once we get into a bullish retest of the weekly open. Until then, I want to see like the local swing structure held, right? Like this stuff. So somewhere around there, testing back up to at least the daily. No, it's too low. Maybe that. I think the high swing is pretty decent on the 4 hour. Somewhere like that. Is that valuable? Yeah. It's still a good risk reward. But again, you always want to target stuff that makes you better as far as trading. And that's really simply, a lot of things have to happen and can change in between these moves. So all I really look for is that if price comes back to my zone, I want to enter on the regain of the weekly open, stuff like that. Or if we break down, right? That's why I set alerts at these levels, because they coincide with trades that I've planned and want to take. So we break down to the downside. I want to bearish retest the level, enter my trade, and it's still valid until we regain that, right? Does that make sense? Because we're gaining back a range. So that's the way to trade plan, which is you set your alerts and you walk away, and then you move on to the next chart, right? You set your alerts, you walk away, you move on to the next chart. And that keeps you two things. It keeps you honest in your trade planning to see if things work out and don't work out. And two, and most importantly, is that if they're not working out at all, you need to fundamentally look at the way you're planning trades. And it also keeps you from FOMOing into positions, right? So if I'm FOMOing into position, that's my constant problem. I just I have that gut feeling. I don't want to miss it. I don't want to lose the money that I put into it and all this stuff. The problem is that most people FOMO into these positions where they're like, I don't want to miss the move. When the smart reaction is, I don't care if I miss the move. I care if it bullishly backtests and confirms the trade, or bearishly backtests and confirms the trade. Like, trade confirmation is more important, is greater than, your FOMO. That's the way you have to look at stuff, which is, if I don't have trade confirmation, which is bearish retest of level, bullish retest of level, the validation of a trade plan, 3-to-1 risk reward or higher, profit targets set at intervals, making sure it can actually hit those profit targets based off of TA, that's how you prevent yourself from FOMOing into position, because that's how you lose your money. It's okay if you miss the moves. There will be more moves. There will always be more moves, at least for the long-term foreseeable future. So there's a better financial system that's not a scam. At the end of the day, trade confirmation is the only thing that matters. Because then if you wait for that, you're being consistent. And if you're consistent and your trade plans are good, you're profitable. You don't have to win half your trades, right? Most people don't win half. How do you beat not winning half your trades? 3-to-1 or better risk rewards. That means you can re-enter your trade at least 2 times and make profit on it. And that's how that you're playing the long game. You're not just playing, I'm going to buy this and then see what happens and then exit. That works until it doesn't work. You have to have a really good system that, you're basing that off a lot of stuff. Like Egil, you, for example, you have a great system. You log coins, you track stuff, you've built Excel files to trade small caps. That system works. You're profitable. Go for it. It's awesome. For the people who are trying to trade long and short on swaps, you have to have 3-to-1 risk rewards. You have to be okay with missing moves. If you're not, well, you're going to FOMO in, you're going to lose your money, and then you're going to cry about it and say it's the market's fault. The market's always right. That's all it is. But I think that's pretty much it. Exactly. The markets will move from liquidity to liquidity. The market makers will move the market from liquidity to liquidity. And at the end of the day, even market makers, right? The market's big enough now, the Bitcoin market's big enough now where, a couple of actors can't influence the market that much. They can do restrictions and like little lower time frame stuff, but higher time frame, it's generally the market that moves itself organically. And that's good. That means that, less price manipulation means more accurate price action, which is great. Again, when you see these things of liquidity grabs and the other stuff we go through, once you start to see them, you can't unsee them. And that's the big thing about it. So, and then looking at, a little bit more on the plans and like thinking about it from a perspective, a lot of people will say, well, how do I enter the trade? How do I take these trades? How do I plan everything out? And even then, I still might go against me. Well, it's really simple. right? Always defer to the higher time frames. If the trade doesn't work out, figure out why it doesn't work out. And if you want to enter, say if I'm planning my trades on the 4 hour and I want to enter on the 1 hour because it has to be the same level, it has to be valid, it has to be important to the structure and everything. If you can do that and do it effectively, well, I mean, there you go. The levels that are the most important play out on both the 4 hour, the 1 hour, and probably higher time frames as well. The lower time frame levels that are kind of like insignificant if they don't line up with the higher time frame levels. So it's all manner of time frame. If you're trading on the 1 and 3 minute, like the moves that you're taking to even get any type of profit on your positions, you're going to have to be taking pretty high leverage positions, which is again stressful. It's not fun. It can go against you a lot, which it does. The easier one is wait for the confirmation on the 4 hour, wait for the confirmation on the daily. See the major gain or loss of level, which is how you keep yourself honest, like day to day, always starting out the day with the same routine. I wake up, I do whatever I got to do before I get in front of the trades. I go over my main list. What do you have, like 7-8 things to go through? From the weekly time frame down, is something changing dramatically that I maybe missed because I have tunnel vision on the lower time frames? And if you can do that and be honest and say, well, oh, shoot, we're doing this on the daily and I didn't see it because I'm focused on the 1 hour or the 15 minute or whatever, it changes your perspective. Because if you look at the weekly on Bitcoin, right? If you just look at like the highest time frame on like the BLX, like a lot of these moves look pretty freaking obvious, right? A lot of these, we held the low of the structure, higher load, gain, bullshit back tested at 40K, the previous range, went back up, failed at like the mid of the previous high range, bullshit back tested this range structure again, blow off high, failure, April Q2, failure of range structure, back to the downside. Like if you just trade the highest time frames, it's pretty freaking obvious about what's happening. But most people have tunnel vision, and that's how you avoid tunnel vision, is that you always look at the high time frames. Every time you get on the charts, you look at the weekly, the daily, all the way down to the 4 hour. Has anything changed? If yes, readjust your lower time frame trades. If no, your lower time frame trades are still valid. It's that simple. So not to beat dead horses with going through the different kind of structure, but high time frames do matter. The daily time frames do matter. The things that we do on the highest time frames translate into price action and actionables on the lowest time frames. So if you're not doing anything on the highest time frames to make sure, hey, what are we actually doing here? Well, we're at the low of a previous range, right? What's the invalidation of the short potential? If we start failing, we look for shorts, right? Because this is a range that we've created here. If we gain the range, what are we looking for? At least midpoint of the previous range, potentially even to the high of the previous range. That's on the daily. Imagine being able to do this on lower time frames, which is what we look at. So it might seem like a lot just to kind of set that kind of as a routine, as a schedule, but like I said, the things that you really need to look out for, look on the weekly, start off, you look at the dollar currency index without all my trash on it, and see what we're doing. Are we failing levels to make new lows to come back down to major test structure that we want to see? Yes or no? Is there anything changing on the daily, right? What's changing on the daily? What's some failure structure that we're seeing on the dollar on the daily? Like there's some major failures from like the weekly open. And you could translate that lower, right? What happens if we fail 102.1? These are monthly support and resistance levels, the February open. What happens if we start failing under this? Well, you should see a upside pressure in the markets. It's that simple. But if you're not looking at it from a high time frame, you're going to look at it like the 1. You're like, oh, yep, that's swing failure right there. Swing failure, done. The whole move's done. And that's what people do. Or look, oh, we're holding the lows here, right? We're holding the lows, and that's important. From the low, we made higher lows. So now we're scalping it back up. Like, it's a matter of perspective. The 4 hour king, you guys know how much I love that. Higher time frames are a requirement. And as long as you set a list with some of these basic things, so you can have a market outlook that translates into something that's repeatable and consistent, then you'll be able to make profit consistently. And that's the hardest thing to do, which is if you don't have a system that's consistent and repeatable, you don't have a system. You have, educated guesses, and you probably get a lot wrong. But that system comes into play really simply. You look at a couple main things, 7 or 8 main things that give you a perspective of We base a lot of stuff off of USDT trades, so we look a lot at the US markets, right? A lot of the dollar currencies. Look at DeFi. Or is DeFi moving? Are we gaining stuff on DeFi? The DeFi perp on Binance is awesome. It still works great. So, is Bitcoin dominance trading? Is alt dominance changing? Right? Are alts leading the way with DeFi perp going up? Right? That's the big thing. Is that the push? That's the next push of the alts, right? So 53%. What happens if we gain this? And on the alt dominance, right? What happens if we gain that, and then Bitcoin dominance does this? Well, alts are going to go on a run as long as Bitcoin price is either going sideways or low volume up. If Bitcoin price is going low volume up and Bitcoin dominance is dumping and alt dominance is pumping, alts are going to send, and that's the play. And it's a cycle thing. Eventually, it'll break structure and come back down. Yes, it's a calculated percentage, but that's a really simple way to look at dominances, right? If I'm looking at the market cap for crypto, I'm looking at Bitcoin and ETH as the primary driver. If Bitcoin's going up and dominance is up, alts will still go up, but they'll go up at a less of a pace, which is what we've seen. If Bitcoin price is going sideways and Bitcoin dominance is going down, where's the money flow? The money flows in alts. If Bitcoin price is going up and dominance is going down, that's the most bullish case scenario for alts. Because then Bitcoin dominance is now dumping, the money flow is into alts, and that's the easiest longs you can possibly ever take. You're just looking for gain of level and longing the crap out of it. In the same sense that if Bitcoin price is dumping and Bitcoin price going down, but Bitcoin dominance going up, alts have the easiest shorts because everything is going to lose levels. And that flow, that direction of dominance flow, just gives you, it's like, hey, well, price is dumping on Bitcoin, dominance is pumping on Bitcoin. So what am I doing? I'm looking to short every failure on alts until proven otherwise, until that trend changes. And that's just a little quick touch on dominance, but you guys get the picture. So any questions or anything like that? I know it was a little bit of a short one, but kind of just wanted to go through routine stuff, important charts that I think work really well in understanding market movement. Yeah. Oh, thank you. Yeah, I can agree to that. Absolutely. A lot of similar structure. Again, ETH Bitcoin, this is just who's leading as far as, the direction of alts. Not saying that ETH specifically, because it's a very large market cap, is going to be changing, or dominance cap is going to be, the leader of all alts. ETH might be going sideways and alts not. But you're right. If ETH is dumping and ETH Bitcoin is dumping, which it has been, it's losing stuff like its yearly open, things like this, and going to the downside. What does that tell you? Where's the priority? Where's the money? Bitcoin dominance is up. Bitcoin price is up. ETH BTC is down. ETH dominance is down. So what does that tell you? Where's the flow of money? It's still in Bitcoin. When you see the reversals, that's why you use your little handy-dandy horizontal line. Say, well, if it gains back, say these lows from 66.9, right? I'll just add an alert on that horizontal ray, so it says, hey, by the way, ETH is flipping. Let's see if dominance is flipping. Let's see if these things are happening, and you can catch the moves before they happen because you're catching the money flow into those different coins. So, yeah, thanks, Egil. A good shout out about ETH Bitcoin. Another great chart to keep an eye on for macro market movement. Because I don't use that enough. I don't use enough of alt against Bitcoin pairs. And I know that. They just kind of bore me because I don't like trading Bitcoin to alts, but there's a lot to be said about using Bitcoin as your underlying asset, and then you're just constantly buying or selling, from Bitcoin back into other things because you're constantly in a state of accumulation. Yeah, that's a very good point. We'll see if the dollar actually dies. It's probably going to take a lot longer than we expect, but yeah, exactly. Absolutely. So that was pretty much it. Any other questions or comments? Otherwise, I'll probably just call it there, and then you can save it and upload it for everybody, which would be great. Nope. Okie doke. Well, I guess that's it. That's all I really have. Oh, jeez. Yep. There you go. That's it, Egil.